Hello everyone. Today's video we are going to look for equity share as well as for the preference shares. Okay, and from here you're going to look for what's the meaning of these two terms and what's the difference between equity as well as for preference and how you can get for equity shares. It means how you can buy for equity shares and how you can buy for preference shares. All those things we can look in this video. Let's see right now. Okay, now we can look what is equity share. Okay, and equity share as well as preference shares. Normally we can say for types of shares. Okay, the major types of shares will be equity shares as well as for the preference shares. And both the shares will be the owners of the respective company. Okay, we are getting for the ownership of the respective company. And equity share and preference shares, how we can differentiate in a sense with the help of the profit. Okay, if the company getting profit, it means we call it as a dividend, right? The preference shareholder, they will get for fixed dividend on each year, but not like equity share. Okay, that's a major difference between equity as well as for the preference. Okay, and these two people are owners of the particular company only. And share, in a sense, the unit of capital called shares. Okay, if you're buying for equity through the secondary market, you are equity shareholders. If you're buying for preference share, in a sense, you are a preference shareholder. This is what the term difference will be there. Apart from that, whatever other differences will be there, we can look forward for the next slides. Okay. So now you can understand what is equity share and what is preference share. Both are owners of the respective company. Only depends upon the preferential right is having for preference shareholders, but equity shareholders such kind of preferential rights not have. Okay, that's the thing. But right now we can look for major differences. Equity versus preference shares. So what's the difference between these two? That is what we are looking almost for 10 different points. The first will be equity shares or ordinary shares of a company. Okay, we can say for the other term call it as ordinary shares. So equity share we can call, or else ordinary shares we can call. Both will be represented as the owners of the company. Okay, ownership of the company. That's for equity share. And preference share also owners of the company only. Okay, and it can carry the preferential rights. Okay, in terms of dividend payment as well as repayment of capital. Suppose if you're investing for 1 lakh, right? If the company is bankrupt, in a sense, preference shareholder first they will get for the capital. After that only equity shareholder will get. That's the reason they have mentioned over here the preferential rights. Okay, we have a preferential rights for the dividend as well as for our capital. Suppose the company occurred for a profit. First they will get a profit preference shares. Once allocating for all the dividend to the preference shareholders, the excess profit will be there. That only we can eligible for equity shareholders. Suppose after allocating for the dividend to the preference shareholder, there is no profit is available, and general public, they will not. General public, in a sense, the equity investor will not get for the dividend. Okay, so that's the reason we are telling for preference shareholder is getting for preferential rights. And mostly those people are investing for long term while compared with the equity shares. Okay, and next will be dividend. Okay, the dividend rate is not fixed. It's determined after analyzing the company's performance in the past financial years. So for equity shareholder, the dividend rate is not fixed, but preference shareholder, the rate is fixed. What's the rate will be fixed while they are getting for preference share? That rate they will get it on each year. Okay. Suppose you may ask the query, the company will not get the profit on a particular financial year, what they will get. Okay, so depends upon the contract, that is cumulative preference share or non-cumulative preference share, like that will be there. If it is a cumulative preference shareholder, in a sense, suppose first 2 year not get any profit, and third year if they are occurring for the profit, in a sense, what they will do, first 2 year, what is a percentage has been fixed for the preference shareholder, that respective dividend along with the current year dividend also they will get it. And apart from that, any profit will be available, that will be distributed to the equity shareholders. Okay, and from here equity share also different types will be there, and preference share also different types will be there. That and all we can look for next video on it, and from there you can understand whatever types will be available. Okay, and in terms of bonus point of view, equity shareholder they are eligible to receive the bonus share, but for preference shareholder, they are not eligible to receive for the bonus shares. Okay, not eligible. And for voting rights, an equity shareholder have a right to vote for particular company decision in a making process, and whatever voting rights will be there, they will get the notification. You can vote for through this particular link and all, you will receive it. Suppose if you invested in a stock market. But if you invested for preference share, in a sense, such kind of voting rights you did not have. It should be limited for preference shareholders. Okay. And for capital repayment, I already told you from here itself, right? If you capital repayment, in a sense, what? If you're investing for 1 lakh or 10,000, in a sense, first, preference shareholder, they will receive it if there is any bankruptcy, if there is any default happen for a particular company. After that only, equity shareholder will receive based on the book value of the shares. Okay. And in terms of risk, equity share will be high risk while compared with the preference shares, but preference share will be low risk while compared with the equity share in terms of risk point of view, because they required only for the fixed return, right? But equity shareholder, whenever the price movement will be high, in a sense, they will sell it, and if it is low, in a sense, they need to hold on it, right? They will focus for the price, the volatility of the share price, they will make a profit of it. But whatever volatility happened, this people will get only for the fixed return. Okay, so the risk will be low while compared with the equity. And for role in management, in a sense, they are the part of owners and right to participate in company management. Equity shareholder, they are part of owner because they are putting for the vote and all, right? So they have participate for the company management decisions and all. But for preference shareholder, don't have any role in the management. And convertibility, in a sense, what? Converting one asset into another asset. Okay, so equity shareholder not possible to convert into preference shares, but preference shareholder, there is a possibility for converting equity share. Okay, now you're getting for a preference shares. Okay, after that you're thinking that not required for preference shares. Can you please convert into equity share? In a sense, it is possible if you're taking for convertible preference share, in a sense. Okay, and arrears of dividend. What is the arrears of dividend? That's an example from the beginning. I told you. Suppose first 2 year not get any profit. Okay, from the third year we are getting, in a sense, the first 2 year not get, right? That's called arrears of dividend. Okay, so in equity shareholder point of view, can't claim arrears of dividend because there is no fixed dividend, right? There is no fixed rate. Suppose the company decided after providing preference shareholders as well as bondholders and all, after that, if there is a profit is available, they can give it for equity shareholder. So that's the reason it is available. Not possible to claim arrears of dividend for the equity shares. But for the preference shares, they can available arrears of dividend along with the current year dividend too, if it's a cumulative preference share, in a sense. Okay, so that person have a eligibility because they are getting only for the fixed rate of interest, right? Fixed rate of dividend. So that's the reason they are getting for the arrears of dividend. And in terms of public issue, that's very important point of view for the difference of these two. General public over the secondary market, we can get it. Okay, what's a secondary market? Secondary market, in a sense, that's called exchanges. For India, NSE and BSE. For UAE, we can say for DFM as well as ADX. Okay, for a general public also, they can get it for equity share. Even one share in one company, it is possible. Okay, but in terms of preference shares, for general public, unable to get, only for the promoters or non-promoters, they can get it for preference shares. And it's not traded in the secondary market like equity share. Okay, it's traded in the secondary market, in a sense. From here, all the people may know, right? And from here, it's traded, the information will pass to the secondary market only, but the eligible person to get it for promoters as well as for non-promoters, not for single individual. If you're having for 5,000 dirham or 5,000 rupees, can I eligible to get for preference share, in a sense? It's not possible. The amount of investing will be high. So that's the reason it is not normally issued to the general public. Okay. And now, how to get equity share? Okay. That is the thing we explain. In the secondary market, we can get for the equity shares. Okay. So, in terms of India, we can say for NSE as well as for BSE. In terms of India, we can say for NSE and BSE. For UAE, we can say for DFM as well as ADX. Whatever shares will be traded, whatever shares will be issued, okay, that's called equity share. So general public, promoters, whoever it is, they can buy and sell over the secondary market. Okay, so through that way we can get it for equity share, and generally individual also we can get it. Okay, even if you're having for 500 dirham, you can get for equity shares with the exchange with the help of brokers. Okay, so middleman will be a broker, right? Through that only we are getting for equity shares. And now we are looking for preference shares. Okay, so how we are getting for preference shares? This will be the big question mark. There is no much data will be available how we are getting for preference shares and all. So this one you will get the information from your secondary market respective company news page. Okay, I will show you over here. This is related to India. Okay, and let me show here for the company. See here, this is a way the preferential issue will be happen. This is for NSE website for Indian Stock Exchange, National Stock Exchange. Okay, that's called NSE, and from here you can look preferential issue. Whatever preference share issue will be happen, you can go from this page and you can get the information over here. And from here, I'm taking one company. See here, Iris Business Service Limited. Okay, I'm clicking over here. It's for 20th June. The resolution date and all. While you're clicking from here, who will get for this preference shares? Everything will be available here. Okay, so the Irish, you can look Iris Business Service Limited. Okay, and category of LOT. Category of LOT in a sense, who's getting for this preference shares? That is a non-promoters. Non-promoters in a sense we can consider for the shareholders. Okay, and who's managing for the portfolio. The mutual fund companies, those people and all will get those people under for non-promoters, and who's trading for high cash. Okay, who's trading for more cash, and those people also will get it. Okay, and from here you can come down in terms of cash. Okay, the consideration will be they required only for the cash, not in terms of shares. But how they are issuing this preference shares? Preference shares will be issued in terms of equity shares as well as in terms of warrants. Okay, that's the reason most of the website, if you're looking in a sense, general public can get for preference shares. They will say it's also traded like a secondary market. Why? In a sense, see here, in terms of equity shares, they are issuing for the preferential issue. Okay, this the amount to be raised and number of securities. This much of equity shares will be traded. Okay, but in terms of preferential issue. Okay, and for warrants, warrants will be this much. So totally this much of capital they are raising over there, and one security rate will be 183.47. Okay, and for the current market price, if you're looking in a sense, it will be 212.70. So how you know the preferential issue happened for this company in a sense? What you need to do, if you're trading for whatever application, okay, that application respective company Irish, you can go under the news tab. Okay, under the news tab you can look for this information. It will be available. Okay, the announcement under regulation for preferential issue. So this announcement will be coming in a sense automatically. You can go and check for this page for NSE. The all information will be available. Who's getting this respective preference shares allotted for which person? All the information will be available, and what is the share price? You can see the variation over here, 193, and from there we look for 212.70. So they are getting for little less price while compared with the current market price. Okay, and equity share, which person and all getting? The name of person also will be listed. Seeing Praditi Growth Fund and Tungo India Long Term Equity Fund. These people are portfolio management companies. Okay, they are collecting money from the general public in terms of long term. Whoever like to invest in a long term in a sense, this kind of companies will collect from the general public and they will invest in a long term funds. Okay, so that's the reason these people are getting from the preference shares with this company. So in terms of equity shares, some portion. In terms of warrants, they are getting for some portions. And you will ask, what is warrants? Because they mention for preferential issue, right? For preference share in a sense, in terms of shares, they are not issuing, they are collecting through the warrants. It means what? Whatever profit will be happen with the company as well as for this person will be get benefited. Okay, they're issuing for the share capital in a sense what? Investor will get From here, only 2% need to get a benefit. If the company issuing the share, broker will get benefit, stock exchange will get benefit, investor will get benefit, right? And company will get benefit very less. But if they are issuing in terms of warrants, in a sense, company will get benefit more while they are issuing in terms of shares. Okay, that's the reason they are issuing in terms of warrants. This is also one type of issuing shares to the public. Okay, in terms of warrants. Okay, and from here, not required to any right, and they will not control for the company and all if they are issuing for the warrants. And what is a purpose the preferential issue will be happened? That is also will be available at the bottom. You can look. Sales and marketing, they are allocating this much, and product and development cost this much, as well as general corporate purpose. Okay, general corporate purpose. General corporate purpose, they are issuing this much amount. Okay, this is a way they will issue for the preference shares, and normal small investor, they will not get it for preference shares. High profile investors and promoters, they will get it for preference shares. So now you can understand how you can get it for preference shares. As you are in this list, so suppose some promoters are looking for this video, in a sense, those people also will get it, but small investors, they will not get it for the preference shares. I think this information will be very helpful for someone. Suppose if it is helpful, you have learned something from this video, in a sense, you can give a like, as well as you can comment below. And someone is looking for this video, you can share to your friends also, and students also watching this video related to preference and equity for finance students. Okay, you can make use of it, those things. And if you're a new user, you can follow and subscribe this channel and keep onwards. Thank you, friends. Thank you for watching this. Bye.